everyone, it's Buffy here, and I can't wait to spill the latest news to you. But wait a minute, let me first ask you this. Have you registered for our Game On? Okay, come on, you guys. Don't miss this once-in-a-lifetime opportunity to get expert coaching from two Hall of Famers, yes, two, Terrell T.O. Owens and Ivan Pudge Rodriguez. They both will share their secrets on how to achieve the winning mindset and succeed at everything you aspire to do. Okay, so guys, take note. The event is on June 25th. The attendance is free. Yes, I said free. And you can also watch the event via live stream or in person at Las Vegas, Nevada. All right, so what are you waiting for? Register now at swmc.com/game on. That's swmc.com/game on. Okay, so now let's dive into the world of news and see what has happened this week. So this is the second episode of our June's Weekly Market Insight series, which comes to you directly from the Capital Markets Trading Desk right here at SunWest Mortgage Company. All right, guys, the chatter of the week was Fed's 75 basis points rate hike. Wow, yes, you heard me right, 75 basis points. Okay, the highly anticipated FOMC's June meeting concluded, and as you all know, the days when the Federal Reserve announces its rate decisions are the times of heightened anxiety for financial markets. This week was not a spare one, okay? As the week initiated, the Treasury market faced one of its worst sell-offs in 4 decades, and yields reached near multi-year highs. Stocks headed toward their lowest slide since January on concern that the Fed's aggressive policy stance will throw the nation into a recession, and continued the rout throughout the week. Last week's CPI print came out to be a surprisingly hot 8.6%. Given the backdrop of persistently high prices, the Federal Reserve raised interest rates by 75 basis points this Wednesday, the biggest increase since 1994. And not only this, Chair Powell even signaled another big move for the next month. The Fed also reiterated that it will shrink its balance sheet by $47.5 billion a month, a move that took effect June 1st, stepping up to $95 billion in September. So let's see what else is driving the market. The University of Michigan report indicated that consumer sentiment has fallen well below the expectations to 50.2 from 58.4 last month. The report on retail sales data also confirms the record low consumer sentiment. Americans have cut spending on goods, which led to the first monthly decline of 0.3% in retail sales this year. Meanwhile, prices paid to the U.S. producers surged 0.8% in May and around 11% from a year earlier, underscoring the persistent inflationary pressure. The bear market for Bitcoin has entered its deepest and darkest phase. The largest cryptocurrency slid toward 20,000, well below the so-called realized price. Applications for U.S. unemployment insurance were little changed last week, suggesting the labor market still remains exceptionally tight. Initial unemployment claims decreased by 3,000 to 229,000 in the week ending June 11th. Let's check in on what's happening around the world. The Biden administration is sending another $1 billion in weapons and equipment to Ukraine. Ukrainian President Zelensky also reiterated that its fighting with Russia will end only when all invading troops leave the country completely. Meanwhile, the Swiss National Bank increased its policy rate by 50 basis points to 0.25%. The Bank of England raised interest rates by 25 basis points, suggesting a smaller yet impactful move. Hong Kong's Monetary Authority also raised its benchmark interest rate in line with the Federal Reserve's hawkish move. However, the Bank of Japan is expected to continue with monetary easing as their central bank kicks off a 2-day gathering. Let's dive into the housing market, shall we? Mortgage applications volume finally increased during the week ending June 11th after 4 straight weeks of declines. MBA mortgage applications index rose 6.6% last week after falling 6.5% in the prior week. Purchases were up around 8% after falling 7% in the prior week. Refinance increased 3.7%. New U.S. home construction dropped 14.4% last month to a 1.55 million annualized rate, the lowest in more than a year, highlighting the impacts of ongoing supply chain challenges and sinking sales as mortgage rates rise. With this, applications to build homes in the near future fell to an annualized 1.7 million units, the lowest since September. The figures emphasize that backlogs are beginning to clear and higher mortgage rates are taking an even bigger toll on demand. No doubt, it's going to be a choppy path ahead for the mortgage industry. Okay, so now let's conclude, shall we? To be sure, supply-side shocks, first the pandemic, then the war in Ukraine, and subsequent sanctions against Russia, are still principal drivers of global inflation and growth. In his post-meeting press conference, Fed Chairman Jerome Powell did mention that another 75 basis point move would likely be in the July meeting, but this isn't going to be in fashion for every meeting. However, let's keep in mind that as we go through a dynamic inflationary scenario, we'll likely continue to see Fed's changing stance and renewed volatility in the market. So that's all we have for the week. Don't forget to register now for Game On at swmc.com/Game On. Okay, please join me again next week for more market updates. As usual, stay updated with our news, and our trading desk will keep you informed with our pricing incentives. Happy Friday. Have a great weekend, guys. Buffy out.